Hello people, it's African Rebel. This is where we guide traders from foundations to freedom. So guys, in this video I'm going to talk about order block, alright? Order blocks. So for those of us that trade order block or those of us that use order block in our trading, we define order block as the candle where large participants in the market comes to place their order, alright? That's how we define it when we talk on a general term. And technically we define order block to be it is divided into two, actually, the bullish order block and the bearish order block, right? So the bullish order block is the candle that sponsors for the buys, for the longs, like for the uptrend, and then the bearish order block is the candle that sponsors for the downtrend. And we define the bullish order block as the last, technically it is always been defined as the last bearish candle, the bullish order block as the last bearish candle that sponsored the break of structure to the upside. That is how the bullish order block is being defined. The last bearish candle that sponsored the break of structure to the upside. And then the bearish order block is defined as the last bullish candle that sponsored the break of structure to the downside. Now, because of this definition, or because of the literal way we got it, most of us tend to mark the wrong order block. Most of us tend to mark order blocks that you see sometimes in the market will come, take just your order block, take your stop loss, and then play in your direction while you are using the order blocks, and you feel like you are getting it because of how the definition actually goes literally. So guys, let's get started. Let me show you guys what it's supposed to be. Now, order block is divided into two for real. That's it. Bullish order block and bearish order block. But the fact that, let's go with the bullish first. The bullish is defined the last bearish candle before the bullish impulse that broke a structure. It's not supposed to be the last bearish candle. It's supposed to be the last candle with the most of the bear momentum. Alright? The last candle that has the most bearish momentum. It can be a bullish candle, but it had a more bear momentum than the bearish candle itself. Take for example the first scenario here. You can see we are having an uptrend. We have this high, and then we just broke the high, just illustrating, right? And if I am to tell you guys, show me another block, literally a lot of people is going to mark this guy because this is the last bearish candle. I'm just illustrating. I just illustrated with this. We're going to hop on the chart and I'm going to explain further. So a lot of people is going to mark this. I see a lot of this from most of my friends who use order block as their entry criteria. I see them do this kind of thing, but in literally it is not correct. It is not like I said, I used to tell you guys there's nothing wrong and correct in the market, but technically it is not supposed to be like so. All right, so the number one criteria is being met here already for the bullish structure to be broken before we can start looking for order block on this impulse. But like I said, it is not the last bearish candle, but it is the last candle that has the most of the bear momentum before the break of the upside. That is the bullish order block. All right, so literally the bullish order block is not supposed to be this bearish candle. It's supposed to be this bullish candle. Why? Because it is lower than the bearish candle here. It's lower. It has more of the bear momentum. It is very, very lower even than this, though it is a full body bullish candle, but it started lower. It is lower, meaning it had more of the bearish. It is more bearish than this guy. It's lower than this. All right, so this is the order block. All right, now let's talk about criteria to identifying a valid order block. The number one criteria to identifying a valid order block is that your order block candle should take the candle before it. Should take the liquidity from the candle before it. The order block candle should take the candle liquidity before it. There's something called single candle liquidity. All right, so the order block candle itself should take the candle liquidity before it. Though I didn't illustrate candlesticks here, but I just used this as all of these are candles. And this candle here, which most people will mark as order block, is actually equal to this candle before it. So it can be an order block. But if you look at the bullish candle, it took the bearish ends here. It is lower than it, meaning there's this from here downwards is still under the bearish end because we ended bearish with this candle, right? And from this low, from the base of this candle to the beginning of it, from this end to the opening of the candle, is still within the bearish range. Though on that particular candle it is bullish, but it is still within the bearish range because it is still within the bearish range of our previous candle. All right, so the bullish range of this candle started from here. As soon as it becomes higher than the bearish candle. So this candle has actually more of the bear momentum, because if you combine these two in a higher time frame, it's going to be something like a pin bar or a doji candle. All right, those of you that understand technically the candles, you're going to understand what I'm saying very well. So the order block here is not this guy, because it is not the lowest candle in this push to the downside. The lowest candle is this candle, which is green, which is actually supposed to be a bullish candle. And the technical definition says the last bearish candle before the break of structure. This makes people mistake the scenario, and people look at the candle that actually have the color to be a bearish candle. This having the bearish color, but if you look at it based on price, read price action, this is the valid order block. It took the previous candle below it, the previous candle liquidity below it, and it is the lowest candle. It is the lowest candle, and it took the previous candle below it. When we go on the chart, I'm going to explain to you guys very well what I'm saying. All right, now the criteria number 2 for an order block to be valid, it needs to have imbalance. Imbalance in the sense that at least only the candle after it should mitigate it. Only the candle after it should come into it. The second candle after it should not interact with it. Let's use this as the scenario. Now look at this. This is actually our bearish order block, right? This one is a bearish order block. It is red though, but it is lower than this level here. So it took the previous candle liquidity, so we are counting it to be the order block based on the criteria 1. Criteria 2, we need imbalance. Imbalance is a scenario when the second candle after the order block don't mitigate it. All right, mitigation is coming to touch. Okay, the second candle should not come into its level. If I am to draw the level of this candle like so, you can see that the second candle after it interacted with the level. The second candle after it here interacted with the highest level of the candle, even up to a range in the body. So meaning it doesn't have imbalance. All right, imbalance is the gap between the first candle, is the gap between the order block candle, all right, and then the second candle after it. For this candle, for this order block, there's no imbalance, because the second candle after it is mitigating it. If the second candle after it was a little bit higher like so, and then we have this candle also a little bit higher, okay, even if this candle is interacting with the second candle, it doesn't matter. So we have it like this. This gap between the order block candle, this gap between the order block candle and the second candle after it, this place is called the imbalance. So for an order block to be valid, it needs an imbalance to be created between the order block candle itself and then the second candle after it, not the first one. The first one can come into it as much as it like, but it shouldn't be lower than it. The moment it is lower than it, it becomes the order block. All right, so this imbalance is not if this imbalance is not there, meaning the order block cannot be valid. All of the rules I'm going to read to you guys. If the order block invalidates just one, if one of it is not there, then the order block isn't valid. All right, so let's move to the third rule. So the second rule is that it must have imbalance. You can see here there is no imbalance, but if you look at this level, we have imbalance here because there's no interaction between this candle. Like I said, I use the lines to also represent candles in the illustration. So this would have been a candle like so, a bullish candle like so. All right, so if you look at this one, there is a gap between this, my order block candle, and then the second candle after it. All right, this is just illustration, so you can see, things are not perfect, but I'm going to explain on the chart in a jiffy. All right, so this is the imbalance. The imbalance is the gap between the order block candle and the second candle after it. So the fact that it has an imbalance, it qualifies it again to be an order block. So the first scenario is you need to take the candle liquidity before it. All right, after that we need an imbalance between the order block candle and then the second candle after it. All right, so let's move to criteria number 3. Criteria number 3 is that the order block candle should have inducement. All right, I'm going to talk about inducement properly in another video, but let me just show you guys what inducement is. Inducement is when you have an impulse to break a structure like so. When you have an impulse to break a structure like so, all right, and then we broke this whole move, broke through this. All right, now what we used to call the trend within. When this guy want to break this guy, he had this like so, came back a little, he had like that, this pullback and that. All right, it must have an inducement. Inducement are usually the pullbacks within before a break of structure. The pullbacks we have within an impulse before it breaks a structure, they are the inducement. All right, so the first one is always the inducement. They have two of them. I'm going to probably talk about the pullbacks that occur before a break of structure in a different video. All right, so at least it should have one. All right, if it have one, then it is going to be a valid order block. Mind you, the pullback should not also mitigate it. If anything comes in contact with the order block candle apart from the first candle before after it, then it is going to be invalid. All right, so the criteria number one, let's go on it again. The criteria number one is it should take the previous candle low. Criteria number two is that it should have an imbalance. Then the criteria number three is that before the break of structure, we should have pullbacks, which we call inducement. Like I said, I'm going to talk about inducement in another video for us to understand better. So if you look at this criteria number two, you can see here that we don't have another block. We don't have another block because fine, it took the previous candle low here, but there's no imbalance because the second candle is interacting with it, so there is no imbalance. Though it also have what we call the inducement, which is this guy. It has the inducement. It took the previous candle low, but there's no imbalance, so it is not going to be another block. The three criteria I called to you, or I mentioned, I just read to you. If any of it is being violated, then the order block is invalid. The three of them must align for your order block to be high probable and valid. All right, so let's move to the last one before we hop on the chart. So if you look at this, like I said from the beginning, most of order block users, or most of people that use order block will mark this guy as an order block already, because you can see clearly the last bearish candle before the push to the upside, just like we used to define it. But it is not the order block. What we are supposed to look at the order block is this guy, because it is the candle that takes the previous candle liquidity. All right, the previous candle liquidity should be taken, so this is supposed to be the order block. But if we look at the criteria number two, which says imbalance, you can see that there is no imbalance here, because the third candle after the second candle after the order block is interacting with the level of the order block candle, which is like so. If I draw the highest point of the order block candle, you can see this guy is in it, so it is not a valid order block already, and it also has an inducement. So let's go to the scenario number one. Let me show something. So let's say price is like so, and instead of giving us that inducement push, it doesn't give us the inducement push, it just broke to the upside like so. It means this guy is not valid to be an order block. All right, because it has invalidated the fact that we need an inducement. Inducement is what we call SMC trap, the smart money trap. Like I said, I'm going to talk about inducement properly in a different video, in subsequent video to come. All right, so stay tuned. If you're not subscribed to our channel, please subscribe. If you're enjoying the video, please please like the content. Don't forget to share a comment as well. All right, so if there's no pullback on the impulse that broke the structure, then even if all the order block meets all of the two criteria, the remaining two criteria, it is still an invalid order block. All right, so let's hop on our chart and let me explain to you guys practically what I've been talking about. All right, people, so this is volatility 75 1S index. Like I always tell you guys, whatever I teach you here works in all markets. All right, you can use it in crypto, forex, synthetic index, stocks, anything that has the Japanese candlestick representation. All I teach to you work on it. All right, so make sure you always practice these things before you put them into your live trading. Okay, so now you can see clearly we are in a downtrend. All right, so from our criteria number one is that we're in a downtrend, so we should be looking for what? Bearish order block. And bearish order block, it was defined, or it is defined to be what? That the way people define it, or the way it's literally defined, is the last since it's bearish order block, the last bullish candle before the push to the upside. Now if I'm to look at the last bullish candle here, let's start from this. All right, so we have a break of this structure already. We have a break of this previous swing, right? You can see price have come through this swing. So as soon as price comes through this swing, you have to start looking for your order block and use the criteria I've listed out to you guys to guide yourself so that you can get the valid order block. Okay, so we broke through the structure, and now we are looking for the order block top down. We are going to look for it like so, right? Because we are going to look for it from how price came. So like it is being defined, last bullish candle before the break of structure to the downside is the bearish order block. This is what it's supposed to be based on the definition that we used to have, but this is not a valid order block. Why? Because this candle is higher than it. You can see this candle is sweeping the top of that candle. This candle is sweeping the top of the order block candle already, or what is supposed to be represented as an order block. The fact that it is sweeping that candle, it means that the order block candle have shifted to it. Now, order block candle being shifted to it, if you also look at it to qualify it to be an order block candle, you can see that the second candle after it is also interacting with this level. You can see that the level, its level here, you can see the second candle after it, even the third candle after it is interacting with it, meaning it is not valid to be an order block. Now, if we look very well again, since we have a push like so, if we look very well again, can we identify another block here? Yes, this guy is qualified to be an order block. Why? Because you can see, if I zoom in very well, you can see it is higher than the previous candle before it. You can see it took the previous candle before it took the liquidity a little. You can see it is higher than it. All right, it took the liquidity. And if I go to criteria number 2, which says it should have imbalance, meaning the second candle after it shouldn't mitigate it. So from here like so till the second candle, the week of the second candle, you can see the whole of this place is the imbalance between the order block and then between the order block and the second candle after it. So there is an imbalance here, and our order block candle took the previous candle liquidity, so it has met 2 of our criteria to be a valid order block. Now let's look for the last criteria, which says it should create a pullback which we call inducement. All right, so if you create a pullback before the break of structure. Now if I am to look at the whole structure we have, like so, we have this guy to the downside, we have this pullback. So you can see we have a pullback before price finally came through. All right, price finally came through to close below and start coming to look for a point of interest to mitigate. So if I am to mark out my order block candle, you can see that price came to the order block candle, and then after that price took off to the downside. You can see how price respected it. If you used all this criteria, like you guys know me, I'm always there to make these things as easy as possible for all of us. So you can see how I'm doing. It's not difficult. The moment you get a break of structure, look at these criteria, 1, 2, 3 of them. If they are all met, what candle is giving you that criteria, that is your order block candle. That's how easy it is, people. All right, so let's look for another scenario. So we have another scenario here. You can see we broke through this structure to the downside, right? So we are now to count from the push to the downside, the impulse that broke our structure, and now to count to look at our criteria to see which of this candle meets to be our order block or not, or to identify if we have another block there to be waiting to place our order there or not. All right, so if you look very well at this end, so this is when we have the final push to the downside. All right, so we have broken this previous swing. Right now, if you look at the candle, the candle here, all right, that's why I told you guys that the definition people give as the last bearish candle, the last bullish candle, it's supposed to be the last candle that has so momentum. It's supposed to be about the momentum, not the color. All right, here on my chart, you all know that the bearish candle here are the lighter ones, and the bullish candle and the deep blue is the bullish candle. All right, so you can see here this is a bearish candle, and if I am to start counting from this push to the downside, you can see that all of our bullish candles don't meet our bearish order block criteria. Look at this. This guy is higher than it, all right, and all of these are already mitigating it, so it doesn't meet our criteria. If you shift to this guy too, the whole of these are mitigating, so it doesn't meet our criteria until you look at this bearish candle. It is a bearish order block. Based on definition, they say last bullish candle, but this bearish order block is having more bullish momentum than this guy. It had more bullish momentum than this guy, so it is actually our valid order block. So it is about momentum, not about the color. All right, so you can see it took the previous candle high, like we said from our rule. The order block should take the previous candle high, so it took the previous candle high there, and you can see the distance or the gap between our order block candle and the second candle before it is what? A lot. We have a gap. The second candle after it, is not mitigating it, so we have an imbalance. So the fact that we have an imbalance is a second confirmation that the order block candle is relevant. Number 2, before the break of structure, we should have what? Pullbacks. Look at this. 1, we have this, then we have that, then we finally came through the structure till this level. We came through the structure to this level before we had the significant push that went to look for our order block. All right, so if I'm to align the order block, you can see we have a sniper entry right there. The market just tap and poof, you can see. So this is how traders get the sniper entries as well. When you have a nice refined order block, you will be able to get all of this. And you can see, if you notice anytime we look at another block and price mitigate the other block, you can see how the momentum to that direction goes. That is why it is being defined that the bigger boys, the larger institutions, the bigger people, or the larger participants in the market are waiting to take their order there. So if you learn to identify these things beautifully to ride along with them, you are also going to be in the good you're going to be in a good run. You can see after mitigation, you can see how much it drops, a little bit of pullback, and then dropping again. So let's look at a scenario when order block fit to let's look at the scenario when maybe one or two of our criteria wasn't met to identify a valid order block, and let's see how price reacted to it. All right, so after that, we have we have broken another structure again, this structure, because this structure sponsored the move to mitigate our order block, so it became a structure as well. The moment it closes above, the moment it closes above the last pullback, it becomes a valid structure. All right, it becomes a valid swing point. I'm going to make more videos to explain this to you guys, so please stay tuned. If you're not subscribed, please don't forget to hit the subscribe button. All right, so it became a valid swing point. All right, so now price broke through it, and after breaking through it, we have to look at what from the descending order, we have to look at a valid order block. Now if you look at the last candle here, it actually significantly met our first criteria of another block, right? If you take the previous candle high, so it met it, but you can say the second criteria isn't met because the second candle after it just mitigated it. So since the second candle mitigated it, it is not meeting our order block criteria. It is not meeting our order block criteria. What about the third criteria? Yeah, it was met because we have a push, before the last drop, before the push. So we had an inducement. We do have an inducement. It took candle liquidity, but it did not have imbalance. All right. So, but before watching this video, many of you don't know all of these criteria. So I'm pretty sure some big boys might have put their order there. Joe, that is the order block. And then let's see what happened. You can see market took the liquidity. The market swept the order block. Well, let me use the line so you can see it perfectly well. You can see where market reverse is slightly higher than the order block, or whatever, for people who would have taken it as another block. The market swept it before dropping because it is a trap. That's what they call smart money trap. All right, so it's for those who use order block without actually understanding the rules to refine it and to identify a valid or a high probable one. You can see the market will liquidate you and still go in your direction. All right, so I think this is where I'm going to stop. In order not to make the video too long, I'm going to make more videos. Like I said, I'm going to be talking more about our SMC strategy. So please, if you're not subscribed to our channel, don't forget to subscribe. If you enjoyed the video, give us a thumbs up. Don't forget to say your comment in the comment section. Stay high and thanks for watching.